Well, hello members, this is March 10th. This is the weekly review for March 8th. I got a lot to talk about, so let's get going. Here's the numbers last week. Finally a retrace. 10 weeks of up, or I should say 9 weeks of up, and then we get the week down. So big week on the small caps, 4% to the downside. That was the big loser. Elsewhere, about 2% to the downside. Year to date, of course, still good gains. One thing that was interesting last week is you actually saw gold pushing to the upside along with what turned out to be a much stronger dollar here. So you had the dollar pushing higher, and at the same time you saw gold push higher too. That's normally not the case, and we'll get into that here in a bit. Bonds, also a big push up, which also seems to confirm some of the ideas that we'll present here in a few minutes. So on the technical picture, what do we got? There's a lot to talk about on the S&P 500, so let's pop into that. If we look at it, what we're going to see is on the short term here, we have an under-over. So we get back over what was an under, less volume. A small pullback, right? Fifth day tries to reverse. And more than likely, that's going to give us the impetus to try and move higher. The test will be here on the bearish retest region. The odds slightly favor it, or actually do favor it, to retrace back to the downside. So in other words, if this were to do what it should do, what you'd see is a push down, a bounce back up into this area, about a full retrace, right? And then another push to the downside. So that's kind of the way it sets up on the daily. Now on the weekly, here you actually have a couple things that are important. One, it's a 2-bar reversal. Less volume, right? An angular ascent straight up, right? Now you get the 2-bar reversal. You also have a test failure at the highs on this move that was to the top side. And so you get over this swing point high. If you look at the volume there, and you look at the volume back here, slightly lower volume, so you go over, back under, test failure. Both of those suggest this should come down more on this time frame. And so on the weekly time frame, you kind of have a bearish interpretation. Short-term time frame, you actually have a bullish interpretation. And so what that says is that if we look here at the short-term view, what we should see is we should see a bounce that starts by the weekend, but by the end of the week, we probably should be sideways to down, given the longer term interpretation. And when I say sideways to down on the weekly, let me go back to the weekly here. What that means is that we could see a bar that looks something like this, right? This bar, whether it's a dark candle or a white candle, it doesn't really matter, but some sort of a, it doesn't matter in terms of me drawing it. In terms of this bar, we could see a bar like that. We could see an open candle where it closes towards the highs, or it could reverse and close towards the lows. But the idea is that probably an inside bar that moves sideways on this given week, given the short term as well as the long term interpretations. Now, if we look back on the 27th of February, it looked like we were going to get some sort of a retrace, and that retrace was attempting to set up. There was a test failure back then at a swing point high that suggested some sort of a retrace. At that time, we talked about where things could trade to. We talked about the fact that we could see a retrace back into the the most optimistic case would just be go sideways, which was basically up here. The more likely case would be some sort of a retrace into here. Worst case would be a retrace all the way back down into that 2700 area or lower. And so those were the kind of the three cases that had set up, and the ones that we outlined back on the 27th. Well, if we fast forward and look at where we are, this is what happened. So essentially we got pretty much what we thought we might get, which is we basically went sideways, right, for a while, and that top area held. Then we finally broke under it. When we did, what do? We go seek the next level, which is what we said was probably the most likely level. Traded right into that, and now it's trying to bounce out of that. Where can it trade to next? Well, it's this lower level that we talked about, which is around that 2700 number, back to about 2675. And so if we think about what we said at the top of the show, right? In other words, you come down, you come back up, do the retest regen, and come down again, that would take us into that level, if in fact it plays out that way. So those setups, a lot of times, we look at those things to try to give us a feel for where things are and where they could trade to, and this one turned out to be quite right, finally, in terms of this market giving us some sort of a retrace. Remember, it's always the failed bounce that's the issue. It's not the first retrace, right? It's the bounce. And so, when you have a market like we've seen in this one, where we simply go up, up, and up, right? And it just goes up, and it goes up, and it continues up, and finally you get the retrace, right? The first retrace is not so much the issue. It's hard to even measure that thing if it's going to happen. In this case, we didn't really get any good setups that told us it was going to happen. It's the bounce, right? When the bounce comes up, this bounce has to carry to new highs. If it doesn't, you're going to get a bigger leg to the downside, most likely. And so the risk is the retrace fails. In other words, you bounce up, you retrace back up, and then you fail to make new highs, and then the sellers really hit the exit, right, and try to preserve the capital or preserve the gains that they've made on the way back up. So that will be the biggest news on the way back. What's also kind of interesting is when you go up as much as you did in this market, right? In this particular case, we go from 23.5 roughly up to 28, right? That's 450 points. You come off 100. It doesn't even feel like you came off 100, right? Almost 100 points off, and it looks like a blip. And that's what it feels like, when you have these big moves to the upside. You get some downside, you keep thinking, it's going to give more and more. Well, you probably got as much as you're going to get, which was quite a bit, considering, just absolute numbers. I mean, usually the S&P trades in a range of 20, 30 points. You get 80 points down on a week. That's a pretty big week. And so I expect we'll probably get some sort of a bounce here. The other thing to notice is that all these indexes are in sync. So what we're saying here about the S&P 500 is true about all the others, the NDX, the IXIC, the Russell. They all did the same thing. They all gave bearish reversals, right? 2-bar reversals, and they all well, I shouldn't say they all had test failures. They didn't. They all gave the outside 2-bar reversal. So that part of it was in sync. Not all the sectors are in sync, though. Some of them you actually had bearish reversals last week, some this week. Some of them gave 2-bar reversals, but the majority of them, or at least half of them, really didn't give us any kind of retraces without signals, or give us retraces with signals. So for the most part, this looks like more or less like we've had a sector disarray, if you will, compared to the indexes, and that also kind of supports a short-term bounce. The other big thing last week, and part of what led this market to where it went, was the euro. Draghi came out, says that this market, or the economy in Europe, was a lot worse than expected, or at least that was the tone of what he gave. He went from more or less a stance of things are going to get better to all of a sudden things are really bad and we're going to have to do something about it. And so if you look at the euro took a huge hit, went down on the week, broke on the weekly, and if you look at the monthly here, this looks like it's going to try and go back to par again. And so the euro extremely weak. That's going to make a dollar stronger, and that is going to put some pressure. Stronger dollar will put some pressure on the large cap stocks, and so that's going to be a problem for them going forward. So this crumbling off the euro, when Draghi came out and says that he had to do an about face, which is actually funny because he's never in his whole term here of, I guess it's 10 years. I mean, I remember him from 2011. I don't know when he actually was appointed. I don't think he's ever raised interest rates. You've got a decade of no interest rates, just decreases, no rises. And so evidently the market freaked out. And the reason I say that is you saw these things that I kind of alluded to at the top of the show. You know, the euro blows out the weekly lows, gold goes higher, you know, the yen rises, which is usually a fear trade, and then you had the long-term bonds, as we saw at the top of the show, just shoot higher. And so all of these look like a fear trade where money no longer wants to put on risk, it wants to put on safety, and those all seem to support that notion, and that all seem to have triggered off of Draghi for the most part. Now, there are some exogenous things that are going to happen. Exogenous in the sense that not that they're not known, but their effects maybe aren't particularly appreciated. Quadruple witching this Friday, that's usually a positive going in, a negative coming out. You got earnings season that's just going to be about a month away at the end of this week, and that says that the corporate buybacks are going to be shut down. They always have to go into remiss or recess in front of earnings, and so that's a big factor. And then both of the above seem to be a positive this week and a negative a week out. So it's something to kind of keep in the back of your mind, which also supports what we said, short-term bounce, right? And so the technical picture here is a bounce this week, back towards that 2,800 probably, and then we'll probably get another leg down. Let's look at the fundamental. I don't really have any political on here. The political is a spectacle and it continues, but I don't have anything on here about it specifically. If you look at last week's number, actually some of them were better than expected. In particular, those things having to do with services. The beige book was worse. So, you know, the Fed looking at its districts and saying, you know, what's the case? Almost every district was downgraded from activity from moderate or modest to moderate to a slight to moderate, which basically is like one notch above contraction. So that was probably the biggest negative. Everything else not so bad. This week, a lot of numbers. I think the U.S. retail sales, given how bad they were last time, will be an important number this time. And you know, the outside exogenous kind of thing here is Japan. What do they do? Bank of Japan. Do they also get on board like everybody else has? Even Canada did it last week, and get dovish again, start supporting the markets. Now, last week, notice we got one worst case scenario. It happened last week. It's the first time this year. What do we think is going to happen this week? I think best case you can get back up to the highs, maybe slightly higher. Or the more likely cases, we bounce up into that 2,800 level or get close to it. Worst case, you get a little bounce and just take off. Go back down to that target that we talked about before, around 2,700, a little bit lower. So that's the way it looks. If we look at the major minor sectors, I'm not going to go through all these. The show's already about 12, 13, 14 minutes long. I try to keep it under 15 now. Last week's calls, of course, the bullish ones did not work out, even though there were multiple swing point breakouts, which is kind of important to realize. Those should try and move higher and didn't, which is a kind of an exclamation point on the fact that the market was in a reversal mode finally after all these weeks up. Uranium was an ugly chart, continues to be ugly. This week there's actually a number of ETFs, both on country ETFs, which are the first three, Canada, Brazil, and Turkey all look like they have some decent bounce setups. Surprisingly, and there is some data coming out this week here, the ITB looks like it's going to try and hold and bounce. So I assume that data coming out on housing numbers will be positive, or at least reacted to in a positive way. There are quite a few ETFs that look to be somewhat bearish. Now, whether or not they're going to get continued move down this week is not as much a issue. These all look weaker. These are not ones I would be wanting to go long. I would be looking to short on bounces, and so there's a number of those that you can take a look at. All right, well, that's it this week. I will check back in next week, give you another feel for where we're at. I'm expecting some positive action this week, only to turn around and turn negative again a week out. Have a great one. Take care. I'll see you next time.